Back to the consumer, BofA downgrading Amex today to neutral as this earnings season brings signs of slowing travel and luxury spending. The analysts note that not even the impending rate cuts could be enough to give Amex the edge over its competitors. Mihir Bhatia is here. He's a payments analyst at Bank of America Securities. Mihir, this reminds me a little bit of the Amex warning sign in 2008, but that was more small business related. It came from the company first. This feels a little bit different. What do you think is going on?
Hi, Kelly. Firstly, thank you for having me on. No, I think, it's like you said, what we're seeing is more and more warning signs, not necessarily that the consumer is turning over or the consumer is weak, but we're not seeing any kind of reacceleration. We're not seeing the back half of the year looking better than the front half, right? You saw the earnings reports from retailers, from lodging companies. Across the board, what we felt, particularly on lodging, travel, restaurants, was signs of weakness, maybe the back half not coming in as strong as the first half of the year. And those are important categories for American Express. Over 20% of spending is on restaurants, travel, and entertainment, right? So if those spending categories are seeing a little bit weaker demand than expected, that suggests that the U.S. consumer is going to have slower growth. There
are people trying to quantify this at the macro level and say, this whole kind of post-pandemic, when the reopening kind of services travel splurge is coming to an end, and we look to be normalizing back to pre-COVID patterns. So by some measurements, there was like $100 billion or so left of that excess spend. So would you describe this as normalization to a pre-existing mean, or something that is more pointing in the direction of an economy-wide slowdown?
No, I think that's the right way to think about it, is the former, the normalization to the mean, right? And that kind of drove our call here, right? We're seeing more and more signs that some of these categories are normalizing towards what was happening pre-COVID, maybe. And in that kind of a backdrop, you have normal growth in consumer spending, but that should drive normal stock returns and normal performance, right? I mean, if you think about it, extraordinary returns in the stock market should come from extraordinary performance. And right now we're seeing normal performance. So we're not saying this is like some kind of break for the company. There's something's going to go majorly wrong. In fact, we think they can achieve the low end of their guidance, but we don't think that this is an environment, this kind of spend backdrop that will drive outsized returns on the stock, which is why we took the rating to neutral.
Not just that, but when you go through your charts, you're basically showing that they're underperforming relative to something like spending on a Bank of America card, for instance. So they're overly exposed to the areas that are pulling back right now. Do we turn a corner, turn of the year, as long as the labor market holds in there?
Yes. So I think as long as the labor market holds, that's a very important point for the consumer. And our expectation is the labor market will hold from BofA economists. That's who we rely on, right, from our research department. And they continue to tell us that unemployment will hold up pretty nicely. As a result of that, we do think that the consumer will come back up. And, I think resilience, I think one of your earlier guests, I think Neil Hennessy earlier was talking about, the consumer is resilient. They'll spend as long as they have jobs, as long as they have the capacity, they'll spend and they'll pay their bills. And we think that'll happen. Yeah. We just think that it's not going to have an acceleration here.
And it's also interesting how you point out this might be an underperformer in a soft landing scenario. In a hard landing, people want to go to the luxury, the high end that might be hit less. But if it is a soft landing, then kind of the more middle class oriented names could actually outperform, which is interesting. Mihir, thanks for bringing this to us. We appreciate it.